PLDT just quietly spent 2.94 billion pesos in cash to take full ownership of the fiber provider, Radius Telecoms. The question for investors is whether this spending is a calculated consolidation of the Philippine digital market or the expensive reaction of a legacy provider trying to offset its shrinking consumer influence. To find the answer, we have to look at the street-level broadband market, where PLDT is locked in a difficult fight to keep its customers. Buying the remainder of Radius serves as a defensive move, aimed at protecting their cash flow by pivoting away from the volatile consumer space. This chart compares PLDT's subscriber growth against their fastest rival, Converge. Converge has pushed past the 3 million subscriber mark with a pure fiber network. In many areas, Converge is now overtaking PLDT in reliability metrics, impacting PLDT's ability to retain its premium base. Beyond the competition, there is a second threat, the new Konektadong Pinoy Act, a law that requires established telecommunications firms to share their physical networks. This tangled mass of wires represents the heavily saturated state of residential infrastructure. Under the new law, PLDT must now allow smaller competitors to use these same lines, eroding the advantage of their physical network footprint. With the neighborhood market crowded and their monopoly over the lines ending, PLDT has begun shifting its focus to a segment of the market that is much harder for competitors to reach. Radius Telecoms operates differently than a standard home internet provider. As seen in these glowing fiber optic tips, Radius runs a 100% pure fiber network built specifically for large-scale enterprise use. Because Radius holds a specialized congressional franchise, it can route its traffic away from the typical congestion found on public internet lines. Think of it like a private, exclusive highway. While the general public is stuck in traffic, Radius provides corporations with a dedicated lane that bypasses the slowdowns of the consumer web. By acquiring the remaining 65% of the company, PLDT now fully controls this specialized corporate infrastructure. This ownership provides the physical infrastructure needed to pivot the core business from millions of individual homes to a smaller number of high-value corporate contracts. This strategy lines up with the Philippine data center market, which is currently expanding at 25% every year as workloads shift away from saturated hubs like Singapore. Global tech giants like Amazon, Meta, and Google require physical space within the Philippines to house the hardware that processes their massive AI workloads. This blueprint shows VITRO Santa Rosa, the country's first hyperscale facility, scaling up to a 50-megawatt capacity to host global tech platforms. Radius Fiber acts as its dedicated connection, creating a secure, closed loop linking VITRO servers directly to enterprise hubs. With this integration, PLDT is moving from a traditional phone and internet company to a specialized provider for the global tech firms building their presence in the Philippines. The results of this shift are showing up in the numbers. This chart shows PLDT's Q1 2026 revenue reaching 54.9 billion pesos, with data and broadband making up 86% of that total. Notice this steady line across the top. PLDT maintained a 52% EBITDA margin, showing underlying profitability remains stable. At the same time, Maya, their fintech division, has finally become profitable, providing a new source of income alongside their traditional telecom services. By utilizing the fiber cables Radius already has in the ground, PLDT is also able to lower its overall capital spending for the year. Lower spending combined with stable margins suggests that PLDT is successfully moving into a phase focused on profitability rather than just aggressive expansion. Currently, PLDT is trading at around 1,235 pesos, which gives the stock a price-to-earnings ratio of 8.48. This dashboard shows a dividend yield of 7.85%. For investors focused on income, that is one of the highest regular payouts available among Philippine blue-chip companies. Because of these income metrics and the shift toward enterprise data, several financial institutions have set a target price for the stock at 1,600 pesos or higher. Does this move into hyperscale data centers make the stock a clear choice for your portfolio? Or is the competition in the consumer fiber market still a major concern? The residential fiber market is more competitive than ever, but by securing specialized enterprise infrastructure, PLDT has established a significant barrier that its consumer-focused rivals will find difficult.